This is your LMAX Exchange technical update for Thursday, February 23rd, 2017. Euro dollar. So the euro continues to have this battle right now that's going on around 105. We're at this critical inflection point where a daily close below 105 will suggest a bearish resumption back towards the 14-year low from January at 103.41, which guards against a critical test of parity further down. At the same time, if the market is unable to establish a daily close below 105, there is risk that we see the formation of a right shoulder of an inverse head and shoulders formation that could project gains in the weeks ahead back towards the 114 area. So again, we're at this critical inflection point. Key levels to watch above and below right now come in by that high that we saw on the 21st of February around 106.15 above, and the low that we saw just yesterday at 104.94 below. Sterling dollar. So cable continues to consolidate off recent highs, but while the market holds below that December peak at 27.75, the overall pressure here does remain on the downside, and there is risk for another drop back towards that multi-year base that we saw, that plus 30-year low from October of 2016 at 118.41. So right now, the key levels here to watch above and below over the coming sessions come in above on a short-term basis at 25.08. That's the high that we saw yesterday, and below you want to pay attention to the low from the 7th of February at 23.47. Dollar yen. So dollar yen continues to be very well capped on rallies as we've anticipated, and the market still is at risk for a further breakdown below recent lows at 111.59, which would expose a measured move objective at 109.50. Only back above 115.62 would compromise this bearish outlook for dollar yen at the moment. Euro Swiss. So Euro Swiss remains pressure to the downside, and despite a little bit of a bounce that we saw in Wednesday trade, the market should be very well capped into rallies ahead of that next downside extension below that critical base, that 2016 low at 106.24. A break below 106.24 will open the door for a test of psychological barriers at 105 further down. Only back above the recent resistance, which comes in around 107.60, would ultimately force a shift in the structure. Aussie dollar. So Aussie continues to be very well capped on gains up towards 78 following a very impressive run that we've seen in 2017. At this point, there is risk that the market stalls out in favor of a bearish resumption. A break and close back below 76 will strengthen this outlook and accelerate declines. Only above 78 here would force a more meaningful shift in the structure. Dollar CAD. So dollar CAD has been supported on dips, most recently down towards 130, and the market looks like it could be basing out ahead of the next major upside extension. Look for a break back above recent resistance, which comes in around 33.88, to strengthen this outlook and accelerate gains. Only back below recent lows at 29.69 would compromise this outlook. Kiwi dollar. So Kiwi has pulled back from recent highs just shy of 74, and the pressure is shifted back to the downside. The market continues to overall show signs of a major top after stalling out in 2016 ahead of 75, and there is risk that this latest bounce is just a consolidation ahead of the next drop below recent support that we saw this week around 71.30 and back towards and below 70 further down. SPX 500. The S&P 500 has traded up to another record high this week, and the market has shown no signs of relenting just yet despite technical overbought readings. At a minimum here, we would need to see a break and close back below recent support around 23.38 to strengthen the possibility for at least a short-term bearish reversal. Until then, there's risk for additional upside in this market towards next key psychological barriers at 2400. Gold. So gold continues to adhere to this constructive outlook that we've been talking about over the past several days. The market had recently traded down to 1180, but the break back above 1220 confirmed a higher low at 1180 and opened the door for that next major upside extension towards a measured move at 1260. We're now waiting for that test of 1260 in the sessions ahead, and any dip should continue to be very well supported. Only back below 1180 at this point would compromise this constructive outlook for gold.